Well, wait, let's unpack this. It is Saturday, January 17th, 2026.
Right.
We are roughly 2 weeks into the new year. And if you are anything like me, you are looking at your portfolio or just the financial headlines, and well, you're scratching your head a little bit.
It has been a confusing start to the year for a lot of people.
Confusing is putting it mildly. I mean, think about the vibe right now.
Hmm.
The holidays are over, decorations are down, and usually the markets are kind of hungover. Everyone's moving slow. But I've been staring at the data from the last 2 weeks and the full scorecard from last year,
Mm.
and honestly,
Yeah.
it looks like someone broke the scoreboard.
It definitely doesn't look like a typical January lull.
And what's weird isn't just that the numbers are up. It's who is up.
Yeah.
We spent all of 2025 talking about the flashy stuff,
Oh, yeah.
the flying cars,
Mhm.
the newest VR headsets, the absolute bleeding edge of consumer tech. But while we were all watching that fireworks show, something massive happened in the basement.
The base.
You know what I mean? The plumbing,
Yes.
the boring stuff, the utility closet of the internet.
Oh, okay. I see where you're going. You're talking about storage.
I am talking about storage. Hard drives, memory chips, the stuff I usually only think about when my phone tells me I have too many photos of my dog.
Right.
But we have the data in front of us now, and to call it an anomaly
Mm.
feels like it feels like an understatement.
It really is. It's one of those market shifts that looks incredibly boring on the surface. I mean,
Right.
who really wants to talk about hard drives at a dinner party?
Right.
But it actually tells you everything about where the global economy is going.
So here is the hook, straight from the analysis we're looking at today. While everyone was chasing the next big, shiny gadget, a sector that most people consider totally unsexy data storage and memory manufacturing didn't just beat the market, they destroyed it.
They absolutely did.
They ate the market's lunch.
By a country mile, as the data says.
Exactly. So our mission for this deep dive is to figure out why. Why did companies that make components we've been using for 30 years suddenly turn into gold mines?
Mm-hmm.
And the big question, is this a blip? Or have we entered a totally new paradigm here in 2026?
It's the right question to ask, because usually when a commodity gets this expensive, it means there's a severe bottleneck. And in this economy, the bottleneck is where the power is.
Let's look at the power. Let's set the stage with the 2025 scorecard, because I want to make sure everyone listening understands the scale of this gap.
Let's do it.
It's wild. So to give everyone a baseline, the S&P 500 had a pretty good year in 2025, right?
It did. It posted a 17.9% gain. In any normal historical context, that is a fantastic year.
Totally.
If you're a passive investor or you're just tracking your 401k, you are high-fiving your financial advisor over 17.9%. That is solid wealth-building growth.
Right. Respectable. Now let's look at the storage sector.
Okay.
We are looking at an analysis of 4 specific manufacturing heavyweights. They didn't do 18%.
No.
They didn't do 30%. They posted gains of more than 200%.
200%. That is the outlier data point right there.
That's huge.
That is not just beating the market, that is leaving the solar system.
And there was one king of the hill, the single best performing stock in the entire S&P 500 for the year 2025.
Mm-hmm.
Was it a cool robot company? A fusion energy startup? No, it was Sandisk.
Sandisk, ticker SNDK.
Sandisk skyrocketed 559% last year. 559%.
It is staggering.
Just to put that in perspective for you, if you had put, say, $1,000 into Sandisk at the start of 2025, just on a whim,
Just 1,000.
yeah, well, you'd be looking at a very different bank account right now.
Oh, yeah.
You'd be looking at over $6,000 just from letting it sit there.
You would indeed. And what's fascinating here is that Sandisk isn't some conglomerate doing a million different experimental things.
Right.
They aren't pivoting to crypto or building electric Jeeps. They do one thing very, very well. NAND flash technology.
We're going to get into the what is NAND stuff in a minute, because I actually learned something really cool about the name that I need to share.
Okay.
But I want to emphasize, this wasn't just Sandisk getting lucky. This was the whole crew, right?
Well, right. That's how you know it's a structural shift and not just a fluke or one company having a great CEO.
The whole sector rose up.
Exactly. If you look at the runner-ups, you have Western Digital, ticker WDC. They soared 282% in 2025.
And Western Digital is huge. They've been around forever. They are the graybeards of this industry. I think I had a Western Digital drive in my computer in high school.
Most likely. Then you have Micron Technology, ticker MU.
Okay.
They were up 239%. And
Nice.
finally, Seagate Technology, ticker STX, up 219%.
So the worst performer of this group, Seagate's, still more than doubled your money.
And beat the S&P 500 by What, a factor of 10, essentially?
Is just mind-blowing. So, okay, let's unpack this. We have
Yep.
these four horsemen of the storage apocalypse in a good way.
In a very good way for investors.
But I want to get technical for a second. What are they actually making? Because to me, storage is just a generic bucket. But the source material makes a big distinction between the types of tech here.
It does, and that distinction is critical because they serve different parts of the machine. It's not just one big hard drive.
So start with the king, Sandisk.
Yeah.
You mentioned NAND flash.
Right, NAND flash.
Yeah.
This is non-volatile storage technology.
Oh, non-volatile. That sounds like a good personality trait for a roommate.
It would be.
But what does it mean for a chip?
In the world of memory, non-volatile simply means it doesn't get amnesia when you pull the plug.
Huh.
It retains data without a power source. Think about a USB drive or the storage inside your phone. If you turn your phone off, your photos don't disappear.
Okay.
That's because of NAND flash. It traps electrons in a floating gate to store the data permanently.
Okay, that makes sense. Versus like the RAM in my computer, where if I pull the plug, everything I was working on just goes poof.
Exactly. RAM is volatile. It needs constant electricity to remember anything. NAND is non-volatile. It remembers on its own.
Now, here is where it gets really interesting. And this is for the word nerds out there, because I totally geeked out on this.
Okay.
I was reading up on why it's called NAND. Did you know this?
I do, but I love seeing people discover it. It's great.
It stands for not and. It's literally named after the logic gates used in the device circuits.
That's it.
It's Boolean logic.
It is. It's fundamental computer science baked right into the name. It describes the specific type of logic gate, the arrangement of transistors, that determines how the data is written and read.
I just love that. It's so literal. It's not some marketing term like superdrive or quantum storage.
Yeah, not at all.
It's just not and. So Sandisk is the NAND specialist. What about the others? Are they all doing the same thing?
Not exactly. They have different flavors, and that diversity helped the whole sector. Take Micron, for instance. They are a bit of a hybrid. They produce NAND, like Sandisk, but they are also a massive player in DRAM.
DRAM. And that's the volatile stuff.
Yes.
Yes.
Dynamic random access memory. This is the high-performance memory. It's what allows a computer or a server to think fast.
Right.
It holds the data that is currently being used by the processor.
So if we use an analogy, because I always need an analogy to visualize the invisible stuff inside a computer.
Think of it like a library. NAND flash is the bookshelves. That's where you store the books for years. It's dense, it's reliable, you can fit 1 million books there.
Okay, the bookshelves. Got it.
DRAM is the desk where you lay the books out to actually read them and work on them.
That is a great analogy. So the bookshelf is the storage, and the desk is the working memory.
Exactly. And the desk is much smaller than the library, but it's much, much faster to grab a book from the desk than to walk all the way to the stacks.
So Micron sells both the bookshelf and the desk.
Precisely. And that is crucial for data centers, which I'm sure we'll get to.
Oh, yeah. And then we have Western Digital and Seagate.
These are the heavyweights of the hard drive world. Western Digital does make flash products now, but they are historically rooted in hard disk drives, the spinning platters.
The ones that make the clicking noise.
Ones that click, yes. And Seagate is very known for personal storage devices, gaming hard drives, network storage, basically big buckets to hold massive amounts of data cheaply. Because while flash is fast, spinning disks are still the cheapest way to store petabytes of data.
Okay, so we have the players, we have the tech, we have the bookshelves and the desks. But here's the thing that bugs me.
What's that?
We've had flash drives and hard drives for decades. This isn't new magic. Why 2025? Why did they suddenly become gold dust?
Right.
Was there a factory fire? Did we run out of silicon? What happened?
It wasn't a single catastrophic event like a fire.
Yeah.
It was a perfect storm. Our sources describe it as an unprecedented, persistent memory chip shortage.
Unprecedented. That's a big word in financial reports. They don't use that lightly.
They do not. The demand materially outpaced supply. But the key here, and this is really the so what of the whole episode, is where that demand came from.
Let me guess. It wasn't people buying more laptops.
No, it wasn't smartphones and it wasn't PCs. Those markets are mature. They grow, what, 2 or 3% a year? People hold on to their phones longer now?
Right.
That doesn't cause 200% price spikes. The primary driver was, unsurprisingly, artificial intelligence workloads.
Of course. It always comes back to AI, but push on that a little bit. Why does AI need so much storage? I think of it as software. You know, code floating in the cloud.
We tend to think of AI as this ethereal software or just math. But that math, needs a physical home. And more importantly, the training of that code is physically brutal on hardware.
Physically brutal.
Think about how large language models work. They are trained on essentially the entire internet.
Right.
You need massive bookshelves, NAND flash, and hard drives to hold that training data. That's the storage part. But then to actually learn from it, the AI needs a really, really big disk.
The DRAM.
Enormous amounts of DRAM. An AI model can't constantly run back and forth to the bookshelf. It's too slow.
Okay.
It needs terabytes of data sitting on the desk, instantly accessible to the processor to crunch the number.
So the AI needs a desk the size of a football field.
Exactly. And because every company on Earth, from startups to Fortune 500s, was trying to build or deploy their own AI in 2025.
Everyone was ordering football field-sized desks at the same time.
And the manufacturers just couldn't keep up. You have to understand, you can't just snap your fingers and build a memory fabrication plant. It takes years and billions of dollars to build a fab.
So when demand outstrips supply,
Econ 101 kicks in, prices soar.
I have the numbers here, and they are wild. DRAM prices went up 170% in 2025.
170%. And NAND prices climbed almost 250% from early 2025 through December.
Imagine if the price of milk went up 250% in a year. Or gas. There would be riots in the streets.
There would be.
But in the tech world, companies just paid it.
They had to. That's what we call inelastic demand. If you are building a billion-dollar AI data center and you need memory chips to turn it on, are you going to let it sit idle because the chips cost triple what they used to?
No way. The cost of delay is way higher than the cost of the chip.
Exactly. You pay the premium. And that premium went straight to the bottom line of Sandisk, Micron, and Western Digital.
It's the classic selling shovels in a gold rush.
It is the perfect example, except in this case, the shovels are made of silicon and logic gates. Yeah. And unlike a shovel, you can't just go to the hardware store and buy a cheaper one.
Right.
There are only a few companies on Earth that can make this stuff at scale.
Okay, so that explains 2025, a massive shortage driven by an insatiable hunger for AI infrastructure. Yeah. But now we are in January 2026. This is the part that I find really baffling. Usually, when a stock goes up 500%, you expect a hangover. You expect a pullback. People take their profits. They go home.
That is the rational expectation. That's what a healthy market usually is. Like, it breathes in, it breathes out.
But looking at the source material, that is not what is happening.
No, if anything, the accelerator is being pressed harder.
Okay, let's look at the now. We are roughly 10 trading days into 2026. The S&P 500 is up less than 2%. It's having a very quiet, respectful start to the year.
Flat, basically.
Yeah.
But Sandisk.
Sandisk is already up another 63%.
63%. In 2 weeks.
It defies gravity.
That is on top of the 559% from last year. It's compounding.
It is. And the others are rallying too. Western Digital is up 23% already this year.
Wow.
Micron is up 19%. Seagate up 16%.
This feels manic. I mean, is there any fundamental reason for this, or is this just hype now? Is this just FOMO, fear of missing out?
There's definitely some hype markets or emotional things, but the fundamentals are still pointing to a severe shortage.
Really?
The trends sending prices higher didn't vanish when the ball dropped on New Year's Eve. The forecast for Q1 2026, the quarter we are in right now, is that DRAM memory prices are expected to climb another 50% or more compared to just last quarter.
Another 50% jump in costs. Yes. The frenetic AI build-out, as the source calls it, hasn't slowed down.
Frenetic is a great word for it. It feels like a panic buy. Like when a snowstorm is coming and everyone buys all the bread and milk.
Yeah.
Except the snowstorm is the singularity and the bread is flash memory.
That's a vivid image. But yes, the panic buying is real on the enterprise level. Companies are hoarding chips because they are terrified of running out.
Which only makes the shortage worse.
It creates a feedback loop. Everyone buys more than they need because they're afraid they won't be able to get it later, which drives the price up, which makes people panic buy even more.
So, this brings us to the reality check.
Yeah.
Segment 5. Because my gut tells me this cannot go on forever.
No.
You can't have a stock go up 60% every 2 weeks indefinitely. Eventually, Sandisk would be worth more than the entire GDP of Earth.
You are absolutely right. Markets are dynamic, and high prices act as a signal. They function like a giant neon sign.
A signal to whom?
To everyone. First, to the manufacturers themselves. When you can sell AND flash for a 250% markup, you don't take vacations.
Right. You run your factories 24/7. You cancel maintenance downtime. You invest every spare dollar into building new capacity to capture those profits.
So supply will eventually catch up.
Eventually. It has to. And secondly, high profits attract new entrants. Other companies look at Sandisk making money hand over fist and say, hey, we should make memory chips too.
Although, isn't it really hard to just start making memory chips? It's not like opening a lemonade stand.
It is incredibly difficult and capital intensive. That's why the shortage has lasted this long. You can't just spin up a foundry overnight.
Right.
It requires ultra-clean rooms, lithography machines that cost hundreds of millions of dollars, and PhD-level engineering. But over a timeline of years, yes, the market adjusts.
Nothing lasts forever, as the saying goes.
Especially in the semiconductor industry. We actually call it the hog cycle.
The hog cycle.
It comes from agriculture. Pork prices go up, so farmers breed more pigs.
By the time the pigs are grown, there's too much pork on the market and prices crash. Chips the same. We have seen this boom and bust before. We are definitely in the boom phase right now.
So we are at the peak of the party.
It certainly seems so.
But the source makes a point that at this specific moment, despite the inevitability of a future correction, the demand is just so high that these companies still look promising.
Right. The music hasn't stopped yet. We are witnessing a historic transfer of value. Money is moving from other sectors and pouring into the plumbing of the internet because, quite simply, the internet is getting a massive upgrade.
It really puts things in perspective. We spend so much time analyzing the software, the chatbots, the algorithms, the brains of AI. We think the value is in the code.
But brains need memory. You can have the smartest algorithm in the world, but if it has nowhere to store its thoughts, it's useless.
Exactly. And that leads me to my final thought for you. We've covered the numbers, the not and gates, the shortage, but here is the provocative thought I want to leave you with.
Well, let's hear it.
We talk about the AI revolution as a software revolution. We think of it as something that happens in the ether. But this deep dive suggests that the real bottleneck, and therefore the real power, isn't in the code at all. What if it's purely physical? If we literally run out of places to store the ones and zeros, does the AI revolution just stall?
That is the multi-trillion-dollar question. If the storage runs out, the AI goes silent. It's a sobering thought.
It's a wild time to be watching the market. Sandisk, Western Digital, Micron, Seagate. The boring guys running the show.
For now, at least.
For now. We'll be watching to see if that 63% jump turns into 100% by next week, or if gravity finally kicks in. Thanks for diving deep with us today.
Always a pleasure.
See you next time.